Hey everybody, Chuck Barone. It is Wednesday, January the 10th, 2024. We're off and running on a brand new year, man. The calendar page is turning quick. Interesting day today in these markets. It's so crazy how everything just flip-flops so quickly, right? So first it was, the inflation fight is over. We're on our way to paradise. Everything's great. Rates are falling like crazy. Market pricing in all kind of Fed rate cuts. Then it was, wait a minute. Maybe not. The market rearranges things, starts to tank. Yields and rates on bonds go back up. Everything looks like, wait a second, you maybe not. Now this is the day before the CPI number comes out tomorrow. And all of a sudden stocks are like, well, you know what, maybe we should be happy and we should think everything's going to be great. And now the stock market just rallies like crazy. Wow, that's very interesting. So let's talk about these markets today. But before I do, let me take a half a second, welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys. You mean the world to us showing up every day. We'll keep this stuff coming for you. All right, so let's talk about markets today. Stock market today rallies nicely, and that was honestly a little bit of a surprise to me. I thought the market would be a little more neutrally today with big data coming the next couple of days. But apparently the market got a little bit of news and thinks that they know what's going to happen, so the market blasts off. So the Dow up 170 points today, 37,695. The NASDAQ up 111 points, 14,969. Looks like NASDAQ 15,000 coming any second. The S&P, the broader market, up 26 points, 4,783 on the S&P. So stocks across the board had a great day today. Companies' earnings continue to come in decently. And I'm surprised, though, because the cost of borrowing, all the factors we talked about with this inflation, not only affecting people, they're affecting businesses, right? Higher wages, higher costs for everything in businesses. Everybody always just assumes they're passing along every penny of that cost plus, and some corporations can do that. Smaller businesses have some trouble. It's harder when you're in a really competitive business, harder to keep raising your prices. So it's an interesting dichotomy going on in this economy right now, where the haves continue to have and have more, and then have-nots continue to have not. But the stock market up today, so we'll see where it goes tomorrow when the actual data hits, right? Bond market today kind of neutral. You had the 10-year selling off just a little, up 1 basis point, 4.03%. The 2-year actually rallies a little bit, up or down 1 basis point. So we had the 10-year up 1 basis point, 2-year down 1 basis point, 4.36 on the 2-year. So the inversion narrowing now, it's only 33 basis points. We had it narrow down to as few as 14. And it looked like the market was going to, instead of going from this inversion, was going to turn kind of back to normal. Didn't happen. So we'll see if this spread gets a little bit wider or continues to tighten. Tomorrow's data is obviously going to be huge. The dollar today down very small, fractional, few basis points, sitting at 102.38 on the index, so pretty much a nothing burger today. Dollar still holding tight. Gold falling today, metals falling today. Gold down $5.40, sitting at $2,024.40 for an ounce of gold. Silver falls 10 cents an ounce, $22.84 for an ounce of silver. Still decent prices. I'd like to see silver a little higher. I would like to see gold keep this to stay above 2,000. I think we will. I don't know if there's a lot of room for upside on the dollar. And as I've been saying, as the dollar continues to come down, you're going to see gold and silver rise. Oil today, down small, down 92 cents a barrel. Now sitting at $71.32 for a barrel of West Texas Intermediate. It's exactly where we expect it to be. Oil seems to be in this trough of around $70 to $75. That's where it wants to be trading. It seems like that's where it's most comfortable. If you look at the chart, it's pretty consistent. It does have these temporary breakouts on geopolitics or supply worries or whatever. Once in a while, it'll break out to the upside. Doesn't take long, comes right back down. We actually had a couple breakthroughs to the downside, but that didn't last long either. So it wants to be between 70 and 75, and that's exactly where it is. Bitcoin today up very small, up $87, for almost 46,000, 45,000 and change on Bitcoin. Market price is fluctuating like crazy. Later in the day, the SEC announces approval 11 Bitcoin spot ETFs. So there it is, guys. Boom, Bitcoin gonna blast off, man. I don't, maybe not today. It's not going to be a one-day wonder. I was reading some analysts saying Bitcoin over 5 years could reach as high as $500,000 per Bitcoin. Well, I think that, obviously having all of these ETFs will create demand for Bitcoin. And we know how we've learned very, very difficult lessons on supply and demand through this pandemic, supply chain, inflation issues. So we know that the supply is going to not be there for Bitcoin. We know the demand is going to be. So I think Bitcoin is ready to go, guys. It looks like if you're a player and you have some Bitcoin, I would tell you, you might want to sell a little bit into these huge rallies, but get your original, investment out if you can. But looks like it's full on go time for Bitcoin. I saw this article today. I just wanted to talk about it for a second. The U.S. government, you've heard me complain about debt, about the government losing its frigging mind, being completely dysfunctional, betraying the American people and the voters. So listen to this, guys. The U.S. debt, as we know, just recently passed $34 trillion. $34 trillion. The U.S. is now adding roughly $1 trillion worth of debt every 5 months. Every 5 months. It took us 205 years to reach 1 trillion debt in 1981. Now, granted, the dollar was worth more and the government was way more borrowing averse, right? Sticking to the original principles, the founding fathers and all that stuff. Remember, you originalists? In the 40 years plus since 1981, we hit 1 trillion. We've now added $33 trillion more. You can see, if you look and see a chart over the course of the debt, you can see things have really exploded over the past 10 years, especially since this pandemic. I got to ask you this, guys. You really think we're ever going to get serious about this debt? You think our government is capable of managing this, of bringing this debt down without punishing working people or retirees? It's really, really, really bad, guys. It's really bad. Okay, so you think the government could get serious about it, really? If so, who's going to do it? Is it going to be the Democrats? They're not known for cutting spending. Is it going to be the Republicans? They'd rather cut taxes than spending. Congress, as I've been telling you guys, and you guys have heard me rant about this forever, a total waste. They're worthless. And it's doubtful to me that anything that happens in this year's election is going to change that scenario. If the Democrats end up taking the House back and the Republicans take the Senate, you still got that same funky balance of power. I don't really see them doing anything more than what they've been doing, which is fighting with each other, doing the bare minimum they have to do to keep the government functioning and keep those paychecks coming. We have huge pain coming, guys, in this country with this debt. It's like having a credit card, right? And even though you're very wealthy, having this massive debt on your credit, sooner or later, we're going to eat it up. We already were a couple of months last year toward the end of the year. We already are spending more on interest on this debt than we're spending on defense, which is far and away our biggest government expense. Guys, no matter how we decide to deal with it, if we go in now, okay, and we're going to deal with the politics of cutting this debt. Number one, just trying to get back to not adding trillions of dollars on is going to be difficult, let alone paying back $33 trillion. I just don't see how they're going to pull it together. Again, no matter what they do, you're going to have big pain. You're going to have some people really unhappy because you're going to have a combination of big benefit cuts, big tax increases, big pain. Everything bad is going to happen all at once with this shit. And then that's the best scenario. The worst scenario is they just keep kicking the can down the road till they run out of road, and we have what's called a financial catastrophe, which is not impossible, guys. Not impossible. We need to start getting serious about managing our own government here. You know, we got the media and the government hand in hand guiding us to what they want, which is nothing more than distraction and conflict to cover their ineptitude, man. We need to get control of ourselves and demand better from the people that work for us. It's not just picking on the other team. Okay, if you're on the red team, it's not the blue team isn't completely to blame. And if you're on the blue team, here's the news flash for you, blue team, the red team is not completely to blame. They both are idiot dumbasses who could give a crap because there's really no immediate consequences to their fundraising or their poll numbers. And that seems to be what the focus of this Congress is, right? So I got bad feeling about this. And here's the interesting, tomorrow's CPI number coming out that everybody's all excited the market rallied on today, expected to be 3.2% annually. So that's actually higher than it was last month. 3.2% is not, I mean, I guess if you're comparing it to 7, 6, 8, 9, whatever, okay, yeah, inflation's coming down. But 3.2% is more, it's 60% above their target number. 60% above target. So they're going to call that great news. Is it? Really? More signs of consumer distress here, guys. Now, the number of people that are 60 days late on their auto loans has passed 6%. The world record. It's the highest it's ever been. Massive payments on cars to blame for this. People taking on payments that they should know better. You know, you've heard me rant about car payments too. 17% of car payments now, almost 18%, over $1,000 per month for a car. That doesn't include your insurance, your gas, your maintenance, tires, and everything else that goes with it. Not a surprise to me, delinquency's on the rise, right? You had the Fed yo-yos out today talking down interest rates. There's, quote unquote, more work to do to bring inflation back down to target. I guess that's foreshadowing the CPI number going to disappoint tomorrow, moving further away from the target than closer to it. So you had to get these Fed guys out here to talk down rate cuts. It's going to be fascinating to see how the market adjusts to this because they're still pricing in cuts as soon as March. Once that idea goes away, which I think it will soon, reality going to set in. It's be interesting to see how these markets react to that. Another last thing before we rock off today. I was reading this article today. The top 10% of Americans, top 10% of income wealthy people, now own a all-time high 93% of all stocks. So it used to be the 80-20 rule, right? 80% of everything good owned by 20% or less, the Fibonacci rule. Well, guys, now they've changed it around because they can. So now it went from 80-20 to 90-10. Oh, fantastic. Good job, rich people. Listen to this. So the top 10% own 93% of all stocks. The bottom 50%, the bottom 50, bottom 50%, half of America, how much stock you think they own? What percentage you think? Want to guess? Here's the answer. Less than 1%. Top 10%, 93% of stocks, and all the value associated with that, trillions and trillions of dollars. The bottom 50% of the United States, the guys who do the work here, less than 1%. So I don't know if that's as horrible as it sounds, but it sure sounds bad. Anyway, guys, that's it for the day. We'll be back tomorrow. CPI, big inflation numbers. It should be a fascinating day to see the way the markets react to them. I got a feeling they're not really going to, because these numbers, we already know pretty much what the number is going to be. I think if there's a surprise to the upside and it's higher than this 3.2, the market could sell off. If it's better, the market could rally. Now they've set the bar at 3.2. How nice. 2.0, the target out the window now. Well, yeah. Anyway, that's the end of it for the day, guys. We appreciate your support as always. If you could, please hit that like button. It changes algorithms around, gets the video in front of a few more people. We appreciate that. We'll be back tomorrow to talk about CPI. Till then, guys, have a great day. Thanks.